Let's face it, most business owners get weighed down by the day-to-day operations of their business. But what about protecting your assets? There are so many ways to do this, but one of the most popular is to create a holding company. Essentially, this is a parent business entity that owns, holds, and controls the assets of subsidiary or operating companies. As such, it's not your typical business, because it doesn't actually make or sell anything. A holding company can own 100% of its subsidiaries, or a controlling portion of the subsidiary through stock or membership interest. That means it can dictate the day-to-day operations of the subsidiaries, including erecting or removing corporate directors, or making major policy decisions. But why set one of these up? Risk management and liability protection, tax efficiency, operational efficiency, asset consolidation, and strategic investments. Let's look at an example. Sarah owns a successful catering company and then later opens up a restaurant, but these two activities are legally considered two distinct business entities. So she creates a holding company called Sarah Holdings LLC and transfers ownership to both businesses to this LLC. Now, Sarah's Holdings owns two subsidiaries, a restaurant and a catering company. That way, if one of her businesses faces a lawsuit or trouble, it won't affect the other company, as each is seen as a separate legal entity. She can also use the holding company to consolidate her income from both businesses to make her tax filings much easier. Plus, she can use the profits from one subsidiary to fund another, or purchase a third, like a bakery. Despite the many benefits of a holding company, there are a few things to keep in mind. Firstly, they come with ongoing legal and compliance costs. After all, each holding company must first be created as a distinct legal entity. This includes paperwork, filing costs, and ongoing maintenance. They also mean you'll have to deal with minority owners. And if they don't share your vision and mission, this can be frustrating. And then there's taxes. You'll need to file tax returns at the federal and state levels. After all, the IRS has rules in place to deter parent and subsidiary companies from moving taxable income around among each other. So, if you are considering opening a holding company, you need a good tax strategy in place to ensure you get the most benefits and avoid potential pitfalls and penalties. And we can help with that. If you need guidance with your taxes or starting a holding company, give us a call.